I think we're more IT, Rima.
All right, so let's go.
Rima, it's not going away from you today.
Yeah. Well, it's been there for the weekend. But Dharmesh, stay on. We've got Manik Taneja, Executive Director, IT Services and Internet at Axis Capital, now joining in. Manik, good morning. You know, we've been discussing the big picture so far and the impact on the industry. But stock specific, if you could drill it down, who gets impacted the most and who can escape this?
Sure. Thank you for having me, Rima. First of all, at the very outset, if you look at numbers, Indian IT has kept on reducing dependence on the H-1B visa program. Just to give you some context, from a combination of initial plus continuing approvals, the top 5 Indian IT companies receive between 40 to 45,000 visas on an annual basis between FY16 and 17. That number was less than about 12,000 K as of the most recent financial year, which is still underway given they follow October to a September accounting. And even from a percentage of the total H-1B visa approvals, that ratio for the top 5 companies has fallen from almost close to 11-12% to about less than 5% now. So the dependence for these companies has kept on reducing, and which has been a function of these companies hiring a lot more local resources, also sponsoring some of their existing workforce for green cards, as well as expanding nearshore presence in markets like Canada and Mexico. So I would say this is fairly a manageable risk, and with the clarity that came up over the weekend, I think becomes all the more manageable. From a ceteris paribus, assuming that these companies continue to essentially apply for similar number of visas as they applied for in the last year on a continuing basis, and which is a big if, given companies will change their operating model and also push some of this increase back to customers, something similar to what we had seen between CY 17 and 19. So if one, or while that will like largely be the case, but assuming that they retain the same number of visas on an annual basis, the impact is probably higher for Tech Mahindra amongst the tier 1 companies. Tier 2 companies much more impacted compared to tier 1 companies, and BPO companies are completely insulated. So sorry for that long-winded answer, but I just wanted to set the context.
Did you speak to any investors who invest in technology names? Do they also concur that the impact is going to be limited? And if that is the case, is the dip any correction, a buying opportunity? And just one follow-up, how much downside from here on then for the IT stocks?
Sure. So I would say if there is a very sharp fall in the stocks today, probably that provides an opportunity to add on to these names. See, outside of the current visa-related challenges, the challenge that the Indian IT services sector essentially is facing is continuing moderation in terms of growth. And given the maturity and the fact that with the way macro essentially seems to be playing, there is concern now as to how CY26/FY27 plays out. So that's where we've had a very selective approach within the sector. So our preferred names are Infosys and Wipro amongst the tier 1 companies, the likes of Emphasis and Hexaware amongst the tier 2 names, and then in the BPO space, Firstsource and Sagility are our top picks.
You said Tech Mahindra is most impacted. Can you help with the numbers?
So as per our calculation, about 4% plus impact from an EBITDA standpoint for Tech Mahindra compared to probably tier 1 companies, which will be anywhere between 1.5% to 2%.
Okay, and how is this arrived at? I mean, how many people do they have on H-1B visa? How did you get this 4% EBITDA impact for Tech Mahindra?
So as of the most recent year, Tech Mahindra basically got almost 957 H-1B approvals. This is a combination of initial plus continuing visas.
Okay.
And we basically arrived at essentially looking at a combination of the average 3-year approvals that these companies sought, and then assuming that they continue to essentially apply for a similar number of visas next year, and 100K charge for that. Yes.
CLSA's note also talks about in the mid-cap space, LTI, Mindtree and Persistent having possibly seeing the maximum impact. Can you help with the numbers here? Because Persistent, while they have clarified to the exchanges, they haven't shared how many H-1B visas they sponsor, and therefore, like some of the peers like Sign, Emphasis have given actual numbers. So can you tell us for LTI, Mindtree and Persistent, and in the mid-cap space, would they be the ones most impacted?
So Persistent between in FY25 applied for almost close to about 192 approvals. This is as per the data that's there on the USCIS website. And LTI Mindtree, I don't have the data offhand, but if you one were to essentially extrapolate that for Persistent, the impact is close to about 7-8% on FY25 EBITDA if they retain that absolute number in terms of new applications next year. As I said, these are all significant ifs because companies will
Correct.
change their operating model, will probably apply for lesser number of visas. Assuming that essentially it's a 7 to 8% impact.
Okay, that's the gross impact pre-mitigation. These are the numbers that Manik has kindly shared for us. But of course, the companies have 6 months. This will be effective only next year for FY27 visas. So that's the timing angle. And the companies will look at increasing nearshoring, local talent, perhaps reduce the number of people they said, just send critical selective H-1B visas. So the actual impact could be a lot lower.
Absolutely. Of course, there is, the problem is there more coming apart from this, right? Because, that Hire Act, which many are saying perhaps is a low chance of passing, but there is another sort of, I think, proposal, increase the H-1B sort of wages themselves. So is that going to basically adds to uncertainty, although earnings impact, as we've been pointing out, remains kind of mixed. All these